TheEconomicCollapseBlog.com. Inverted global yield curve creates the perfect cocktail for a liquidity crunch as the IMF, International Monetary Fund, warns of a second Great Depression. So I'm thinking, okay, well, you talk about the Great Recession of '08? No. The Great Depression. The recession was just a recession. Why would the IMF use the phrase a second Great Depression in a report that they know the entire world will read? To be more precise, the IMF stated that large challenges loom for the global economy to prevent a second Great Depression. Are they saying that if we do not change our ways, that we are going to be heading into a horrific economic depression? Because if that is what they are trying to communicate, they would be exactly correct. At this moment, global debt levels are higher than they have ever been before in all of human history. And in their report, the IMF specifically identified global debt levels as one of the key problems that could lead to another financial meltdown. The world economy is at risk of another financial meltdown following the failure of governments and regulators to push through all the reforms needed to protect the system from reckless behavior, the IMF has warned. With global debt levels well above those at the time of the last crash in '08, the risk remains that unregulated parts of the financial system could trigger a global panic, the Washington-based lender of last resort said. And the IMF report also seemed to indicate that global central banks were responsible for the situation in which we now find ourselves. In the report, an extended period of ultra-low interest rates was blamed for the buildup of financial vulnerabilities. The IMF Global Financial Stability Report read, "The extended period of ultra-low interest rates in advanced economies has contributed to the buildup of financial vulnerabilities. The large accumulation of public debt and the erosion of fiscal buffers in many economies following the crisis point to the urgency of rebuilding those defenses to prepare for the next downturn." This is extremely unusual language for a globalist institution such as the IMF to be using. Are they trying to signal that a major global financial crisis is imminent? Of course, they would hardly be the first to sound the alarm. Prominent names throughout the financial world are making all sorts of ominous declarations these days, and more red flags continue to pop up with each passing day. For example, according to one analyst, the global yield curve has gone negative for the first time since the last financial crisis, and this has created the perfect cocktail for a liquidity crunch. A stronger US dollar and the global cost of capital rising is the perfect cocktail, in our opinion, for a liquidity crunch. Major liquidity crunches often occur when yield curves around the world flatten or invert. Currently, the global yield curve is inverted. This is an ominous sign for the global economy and financial markets, especially overvalued stock markets like in the US. So if you want to look at this little chart real quick, give you an idea, there's the dot-com bubble. There's 2008 problem, boom, and here you are today. Here's you. Pretty interesting. Major liquidity crunches often occur when yield curves around the world are flat or inverted. Currently, the global yield curve is inverted. This is an ominous sign for the global economy and financial markets, especially overvalued stock markets like in the US. To me, that is one of the most alarming charts that we have seen in a very long time. Everything in the global financial system revolves around the flow of debt. When money is cheap, flowing freely, economic growth tends to expand. But when a liquidity crunch happens, economic activity can start contracting very rapidly, and it looks like that is the type of scenario that is quickly starting to develop. In fact, we are already witnessing a substantial liquidity crunch in emerging markets. Lenders are hesitant to lend while economic conditions in those countries are chaotic, and a rapidly rising dollar has made servicing existing dollar-denominated debts increasingly problematic. As we witnessed in 2008, debt bubbles end when liquidity begins to tighten up. The only way that this current debt bubble can survive as if it continues to expand, and it can only expand for as long as lenders are willing to part with their money easily. If interest rates continue to go higher, the U.S. economy and the global economy as a whole are going to be hit really hard. On Thursday, the fact that interest rates hit new multi-year highs was blamed for the large decline in the stock market. Stocks fell sharply on Thursday as interest rates hit new multi-year highs, dampening investor sentiment. The Dow Jones Industrial Average dropped 201 points as Nike and Home Depot lagged. Well, I just had to buy a new, speaking of Home Depot, what do you call it, a motion light. Outside, thing was staying on all day and all night, wouldn't shut off. And I had to get a new one. But I guess it didn't help Home Depot on the drop there. Sorry about that. The 30 stock index dropped 356 points at its lows of the day and posted its worst decline since August 10. The Dow hit a new all-time high earlier this week, but many believe that it was essentially an illusion. Because right now there are 3 times as many stocks at 52-week lows than there are stocks at 52-week highs. Prior to this week, there was only one other day since 1965 when this happened. There have been 2 days since 1965 have seen 3 times as many New York Stock Exchange stocks at year lows than at highs, while the Dow traded at an all-time high. The only other time prior to October 3rd, 2018, December 28th, 1999. The Dow was just days prior to hitting 11,722 on January 10th, 2000, which would mark its long-term top. It would bottom at 8,062 on September 21st, 2001, a 32% decline. The Nasdaq lost over 60% of its value during that same period and would decline 78% from its all-time high. I know that I've used a lot of technical jargon in this article, but the bottom line is this. Big trouble is coming. At this point, even Dennis Gartman is saying that one cannot but think that a global bear market of some very real consequence is developing. Sentiment on Wall Street has shifted at a rate that is absolutely breathtaking. The mindless optimism of recent years has been replaced with an ominous feeling that a major downturn is imminent. And because markets tend to go down a lot faster than they go up, a lot of people could end up being wiped out financially before they even realize what just hit them. About the author, Michael Snyder is a nationally syndicated writer, media personality, and political activist. He is publisher of the most important news and the author of 4 books, including The Beginning of the End and Living a Life That Really Matters. So, I'll link this like I always do. But, I hear this and it makes sense. I've been knowing this stuff for years. I've been talking about this on YouTube for years. Everybody knows this, and it's like, I was in a hurry in the beginning to get silver for the days that this sounds like are coming, right? And here I am. Well, it was 2007. It was 11 years ago. It's 11 years ago when I first started buying real silver, physical silver. A couple ounces here, a couple ounces there, And in preparation, I'm thinking, I'll never have, gosh, if I can, how long is it going to take me to get this certain number? Oh, will I have enough time, because I didn't just have money to go buy stuff, silver. But I slowly did it, kept going. Oh, we still got more years. Oh, then the run up in 2011 happens, $50 silver. Oh, here it goes. Crash, stays down. But the bad times we are expecting haven't really hit. Well, the recession was not fun, but let's face it. The debt problems, everything we were expecting, the reasons I do these videos, the reasons I talked about silver and crypto and trying to protect our financial livelihood when this stuff happens, still ain't here yet. And now we got Trump in the office, the Oval Office. But he is one man. And if the global economy is time to take a, tank, could he, as one man, even though there are people under him who will be by his side, could they stave off this? Again, only thing we know how to do is print money. Control-Alt-P. Print. You must print it. When your debt's not big enough, you must print it. Print it up. Shape it up. It's not too late to print it. Right? Unload that debt. When a problem comes along, just print it. Yeah, but anyways, in all seriousness, you know, part of me is like optimistic, like, okay, we're fixing things. These criminal Democrats and the club period and the rhinos, you know, the Republicans, there's some of them, is going to get taken care of, you know. Are we going to be able to just like declare this debt, like, you know, something, and Donald Trump, you know, I mean, it's possible. But again, when you look at history, history doesn't show that some savior comes and fixes everything. The debt doesn't get fixed that way. We don't have these jubilee, oh, everyone's debt's written off. You own your house now and you own all the credit card debt. Don't worry about it. Like that doesn't normally happen. So this makes sense. So the thing is, if this happens, again, hopefully with cryptos and your silver or whatever, these alternate things we've talked about, it doesn't hurt us as bad or at all. Maybe we find opportunities within the crisis to say, wow, I can actually earn some money here or do something, you know, something good. And that would be an interesting story. Yeah, when everyone was, you know, panicking and everything, it was, we were fine, you know, your father and I, you know, Grandpa Joe, you know. Oh, great, here's another story about Grandpa Joe. Or Grandpa whoever you are, right? Grandma. But maybe it worked out. The other side of this is, well, what if those things don't work out? The silver and the crypto and all that. What if it doesn't work out? Then no harm, no foul. We tried, right? I mean, we tried. It's what we prepared for. If you didn't, then what good is it anyways? You got screwed anyways, right? That's one of the other points of why I'm willing to take a shot over here at some of these other things. You know, the precious metals, you know, cryptos, especially now. So yeah, I mean that's just me talking, but I do have a little bit of optimism in there because Trump's in office. If he wasn't in office, zero optimism. And I'll be honest with you, we're 2 years into this now with him. Where would we be at this point? Would this crash have already happened? This, you know, because we know what their plans were. We know what their plans were, and it was to crash the economy. Again, cause a problem, offer a solution, world government, we need this, you know. And now Trump's throwing that upside down. So there's optimism there for me, which has not used, you know, I'm a realist, man. Hasn't been there. There's no optimism. I'm preparing for the worst case, hope for the best, prepare for the worst. That's all we're doing. And imagine if we prepared for the worst, cryptos, whatnot, and it didn't even happen or happened such a tiny amount of this bad thing that we expected was nonsensical. And yet the crypto still did their thing. And you made out like a bandit while not having to watch the rest of the world suck during a bad period of time. Things are pretty decent, and you made a bunch of money on these cryptos. Like, that would be great. So again, the worst case is, well, what if the cryptos don't do their thing, they crash and burn, and then this shit happens anyways? Again, what the hell could you have done otherwise? What else could you have done otherwise? Would be my question to you. So, that's why I'm here. Got my crypto still. Got my silver still. I'm just keep doing what I do every day, baby. Take care.